What's going on, Money Morning Live? It's always a good time hanging out with Nick Black, answering those community questions. Brandon doesn't do such a bad job himself, but right now we're flipping the script, bringing in power profit trades with Tom Gentile. Let's bring him in 5, 4, 3, 2.
Hey everybody, Tom Gentile. Welcome to Power Profit Trades, 3/15/22, March 15th, 2022. Next hour, we're going to talk about the markets from a volatility standpoint. I want to revisit Rivian because I want to set you up for another profit that we took yesterday on the Operation Surge Strike. So we'll also be going into Brutus. We're going to see what's going on. I want to share a new opportunity with you that we're looking at on the horizon. We'll update that major trigger event opportunity that I've been tracking. And also, we'll check out the Brutus software to see which of the opportunities, because we see a few more that are popping up that we may want to add to our watch list. And of course, we're going to get into all the details for those of you that are part of Operation Surge Strike. We'll get into all those details at 1 o'clock in my private room. So, Eric, what's happening today?
I mean, it's Operation Surge Strike Day, Tom. We get to hang out here, then we get to go hang out with you and Mike at 1 o'clock. It's one of the best days, so I'm excited about it. Yeah, hopefully we get some people to come along with us for the party too.
Yeah, so a lot of news happened in the last 24 hours. You know, I wanted to say we won't be talking about cryptocurrency, but I'll throw a chart of Bitcoin up here when we begin and just get an idea of what happened yesterday as the markets dropped, because it's very interesting what Bitcoin and most cryptocurrencies did yesterday. Before we get started, however, I have to do it, Eric. I mean, every single day I'm getting attacked by phishers who somehow have got my email address, and they have decided that they're going to go after me. And I know a lot of you are in the same situation. So this is my PSA for the day. Check out, look, bright and early this morning. There it is on my phone.
Amazon's trying to scam you here, huh?
What's Jeff Bezos need a couple more dollars for? Oof. You know, I mean,
so
anyway.
What does this say? It says, we recently detected unusual activity on your account. Unfortunately, we had to suspend your account. When you see this stuff, these type of emails coming through, you just have to know that they're phishing for stuff. If you see this, don't click.
First of all, I'm not the Amazon purchaser in my family. My wife is.
There you go.
So when someone sends me something, first of all, let's dissect this just for a moment here before we get into the markets. See where it says hello? That should have my name. Hello means it's going out to more than one person, right? And if I really wanted to spend time on this, which I don't, I could go out there and see exactly what that IP address is. It's probably somewhere in the middle of nowhere. So I know it's not me. I also know that if I did go onto my Amazon account, which I rarely do, it's going to open up just fine. My wife's opened up just fine. You see where that yellow button is that says verify identity? What these people want you to do is put all of your information in so they can then get to your Amazon account and spend your hard-earned money. So that's my PSA today for you guys. If it looks suspicious, it more than likely is suspicious.
And Tom, one more thing you notice in a lot of these is spelling errors and punctuation, no periods, no commas. Amazon would make sure that this stuff came through perfectly. So it's a clear scam right here. So good eye, Tom.
Exactly. All right. So with that said, let's get to the market update, and we'll end that with some market news that I like to call good news, bad news. All right, market update. Hey, let's go ahead and just start with Bitcoin since I have it on my screen. And so this is a real-time chart of BTC.
Tom, flip over your screen for me. We still have we don't have your screen shared, buddy. Looks like
we forget. You and I start talking so much before the show starts.
It's my fault.
I never get this done right.
Blame me. Sorry.
There's our screen. There's our Bitcoin screen.
Looking good.
And what I'm looking at here, folks, is I'm looking to the hard right edge right over here. Okay, so yesterday morning we're talking, and Bitcoin was just up a little bit, and we saw that surge into the day. There it is. There's that word again, surge. We're going to be using that a lot here in the hour. But we had a surge in Bitcoin. It took us almost back to 40,000. A little bit of a blip this morning, but here we are, 39.2. And, just looking at that same range we were looking at, I'm not going to go into yesterday, the discussion, what discussion we all had yesterday, but there it is, just kind of supporting what's been happening now for the last couple of months with this cryptocurrency and a good bit of the big ones as well. Stock charts, that's where I want to head for today. Let's start off. And what I'm doing is I'm going to put some trends on here. I did a little bit of this yesterday, but I'm going to share a little bit more, drop a little more knowledge in your lap today. So this is the SPY, okay? S&P 500 ETF for those of you that don't know. This trades at 1/10 the value of the S&P cash, right? So when you see the S&P cash going across the bottom of your screen on mainstream financial news, you take that number, basically divided by 10, and that's what the SPY trades at. SPY is an ETF you can trade in your stock account, right? In fact, this is one where a lot of buy and hold traders that do not want to pay fees for a mutual fund, this is where they'll go. This is like a low-cost fee of the S&P 500. All right. Pays dividends too. So here we go. As we're moving along here, you can see what this thing has done. It was caught in a channel since October, right? Really below 450 on the low side, back and forth, jumped above that 470 area just for barely a week, and then started its reign of lower highs and lower lows. Check out the long-term channel. Check out the short-term and intermediate term. They're overlapped right on top of each other. What we do when we look at these is I go back around 100 days to find these trend channels, okay? Give or take a few days, 100 days. And the computer will plot these channels for me. And so, as I'm looking at this, we definitely can see these lower highs and lower lows. What's happened here today? Got a little bit of a bump up today, but we're nowhere near yesterday's rally. In fact, if I run this up to the latest chart, you can see here, we have not eclipsed yesterday's high. Remember what happened yesterday? We got that run up and then market gave it all back. Well, we're getting a little bit of a run today, but again, we're not at yesterday's high. We're going to run into some, what I like to call mid-level resistance. We're in a tight area here. We've got to get above and close above yesterday's high if we have any chance of getting back up to what I'm going to consider another lower high. So the trend in the S&P, still down. Bond market, still down. In fact, this is, I saw some news that came across the Bloomberg terminal yesterday that this is the worst bond market in years in terms of buying bonds. Not buying bonds for a fixed amount of money, but buying the bond market, buying bonds to turn around and sell them. And you can see right here, if you bought TLT, which is an ETF that tracks the Barclays 20-year Treasury, right? If you bought that and you bought it up here in the 150s, you're down. You bought it in the 140s, you're down. This thing is trading down in the low 130s now. That's a huge drop off in what is otherwise considered as a safe asset. We're always told bonds are a safe place to go. It's a fixed amount of money. Yeah, that's if you're buying and you're holding it for years and you're taking in that small, paltry little interest rate you're going to get from it each year. But if you're buying bonds like this to turn around and sell them, it's not a good year. It definitely isn't a good year for you, right? So, I mean, even just year to date, we've gone from mid 140s to low 130s. It's off about 10%. Not something you hear about in the bond market. USO. Well, there you go. We talked about this for a few seconds yesterday, that what cometh up is going to come back down, and we were looking for USO to trade back down here in this area below 70. Well, here we are now. We are at, here it is, 68.32. Remember all the area we were looking at before the big blast off. That's where we're coming back to, all right? 66 to 67 looks like the first real area of technical support for the bond market. And what am I looking at? I'm looking at these dotted lines. These are what we call stock chart peaks. What they do is they take areas of peak support and peak resistance, and we run that dotted line, and that gives us an area where the market can come back to. All right, and this is a mean reversion area of support. Now, you take that and you add on that rising support level that's on the channel, And that's going to come in right around that 65 to 67 area, depending on how long it takes to do it. That might be a great area to look at capitalizing in the oil markets. I saw another article, Eric, that came out. I read so much of this stuff in the morning.
Yeah.
Rich Dad, Poor Dad got into some trouble with his followers yesterday when he said that basically when he heard Joe Biden give the executive order on cryptocurrency recently, he said, uh-oh, the U.S. government is going to seize your cryptocurrency. So I'm betting on oil. That's what he said. He got a lot of flack for that one. But he's got actually suggesting going into oil wells or these personal. They're called private drilling developments. I think PDDs. I get a little nervous about anything private because that's wildcat drilling is what we call that. Wildcat drilling is where you put money into an investment. Yeah, you get some sort of a depreciation, a tax depreciation when you do these. I don't know what it is. I'm not a tax advisor, so I'm not going to go into it any more than what I've read. But wildcat drilling is I could drill in my backyard. Chances are I'm not going to get oil. Or I'm probably going to get water many more times before I get oil here in Florida. But you got to realize the high risk that comes with what's called PDDs. So I say that because he jumped on and started talking about that when oil was at $130 a barrel. That was just a few days ago, all right, a week ago. Look what's happened since then, right? I believe we're back below $100 a barrel now. And if you look at USO is down substantially, even from yesterday. But look at last week. USO hit a high of 87, and now we're trading at 68. That's a good 15% off that high from last week. Okay, so the trend in USO and in oil still is up, but let the mean reversion, let the greed of last week become the fear of this week before we start to put and inch our way into the oil markets. How about gold? Yeah, we talked about this one too. I like gold long term. You guys all know that. But that move that happened over a week ago certainly was going to come back, and we were looking at that 175, 180 area. Well, guess what? 178.77 today, coming back down, another gap down. The commodities that were hot last week are definitely cooling off a bit. I don't think that changes the long term, okay? The long-term aspect, if you're a buy and holder, I don't think that changes long-term at all. I think what happens is that the U.S. dollar continues to drop. I mean, what happened last week? We put another stimulus package together, all right? That was I can't remember what it was called, but there was several hundred or there were several billions of dollars that went to aid in Ukraine, all right? And that went through, and it went through quick. Went from the House to the Senate to the desk, the Oval Office, very, very quickly, right? And that 1.5 trillion is getting added on to all the other debt that we have. So long term, I don't see changes. What we do see is that short term mean reversion, as we're looking at here on GLD. All right, the VIX hit a new intraday high. Now, this is the future VIX because yesterday things got a little nervous there around noon, 1 o'clock yesterday when everything started dropping to new lows. And here we go. We jumped and had that bump up in the VIX. Now, Eric, I want to get a little time extension here. I'm going to need a few more minutes, my man.
You got it. We'll adjust the clock for you, Tom.
We have plenty of time to get into trigger trades, so I want about 10 more minutes on the clock.
You got it.
And the reason why is because I want to get into, boy, if I got some stuff I want to show everybody. I really do. And I want to definitely talk about news. So trigger events will be starting soon. All right. So let's just jump through real quick. Facebook. Look at the trend on Facebook. It's down and down. Long-term down and intermediate-term down. But you know what's been happening? And I said this yesterday. If I zoom in just in this area, we've been seeing a really good area basing going on here. And so you've got an area, and I believe this is 190. No, it's 200. That area above 200 there, we get above and close above 200 after what's happened here the last week and a half, 2 weeks. That might be a sign for a potential longer term opportunity. Again, I don't have a signal on Facebook. I'm just showing you what we're watching. Apple, again, it's bouncing off that low. Remember, yesterday morning we were sitting here tagging that 224 low, and then in the afternoon it dropped down. Kind of getting one day above that. That's not making me excited about this. This could just be a one-day relief rally. We will see. But if you look at Apple, Apple's the first stock. All right, the first thing we've seen. Now we saw gold and we saw USO, but first stock, and it might be one of the few we see where the trend is sideways to up. All right, when we look at my computer, Amazon down, trend down, but we do have sideways happening on the intermediate term, going from about 2,700 on the low and topping out about 3,300, 3,250 on the high side. Amazon's having a bit of a relief day, but it's going to run into some resistance at the highs that we saw yesterday. Moving to Netflix. Netflix, again, downtrend, long-term downtrend, intermediate and short-term downtrend. Not much of a move there that would get me excited about looking at Netflix long-term. Google's also in a downtrend, both in the long-term and in the intermediate short. And you can see here, it's getting a little bit of a rally right now, but this is this just a sucker play? We will soon see. Tesla, take a look at Tesla here, and you can see Tesla too, a little bit of a relief rally. Now, Tesla did not move down to its February lows like some of the other FANG stocks, but still, just struggling to get above, and let alone stay above 800. I mean, we're talking about a stock that was 50% higher, 33% higher, depending on how you call it, 33% lower. To get from 800 to 1,200, we'd need a 50% rally in stock. I don't think that's going to happen anytime soon, right? Now, let me share with you some very interesting charts here as I finish this up and we talk a little bit about some news events and good news, bad news. Take a look at this, Eric. The forgotten stocks. Here's the forgotten stocks. Probably not forgotten if you got pulled into this emotional roller coaster, which is called GME. All right, this is GME, and I'm just looking at it since November, when it was trading around 240 to 250 a share. Oh, look where we are today, $84. Lower highs and lower lows as we've had this downtrend happening for months now, and it caved. It caved on Friday, going below $100 a share, quickly dropped to 80 before getting a little bit of a rebound today. I did some digging. I'll talk about this in just a moment. Look at AMC. You want to see one that's just as bad? $45 in November, $13.92 as of this particular chart. Wow. I mean, it's, you look at that and you think, if anybody long in these two stocks, I don't care whether you were a buy and hold after the meme event or you were trying to buy call options on the way, looking for another move to the astronomical levels these went to. That was tough. Let me just share with you two more charts, and I've got them right here. Here is the chart of GME. This is a fear and greed chart. Greed in green, fear in red. Greed, fear, greed, and then the fear slowed way down as GameStop, below estimates in their earnings. And of course, next earnings are coming up in 2 days. This is not a Brutus event, all right? Because Brutus can't figure out a pattern when it's going up, down, up, down, up, down. It can't do it. Hey, there's Brutus.
Yeah,
love it.
We made that happen.
That's cool. You take a look at this, and this is fear and greed. Look at AMC one more time. Look at the rocket ship that happened. Now, I want to take that, and I'm not going to name names. I don't do that. All right. You guys know me. And so, but there were a few people that became YouTube sensations that went from their jobs not even in the financial industry to following these two stocks, garnishing hundreds of thousands. Let me say it again, hundreds of thousands of followers. And after that big move up, the apes, you want to call them, to the moon, they said. All right. I checked in on a couple of these guys. I can't find one of them anymore. And the other one is dropped down to about 5,000. He's gone from hundreds of thousands down to 5,000. I wonder where everybody went. Eric. Now, this is not a bunch of 50-plus-year-olds, all right? This is not my age group. I think what's happened, and it's sad to hear, a lot of people took stimulus money. A lot of people last year took their stimmy money and threw it into these trades and threw it into buying and going long, waiting for it to go to the moon. You know, they didn't buy it down here. They started hearing about it when it showed up on mainstream television. And then they listened to these guys have zero plan, emotional, to the moon, I'm buying more. And so, it's sad to hear this because they got the wrong education. You know what they walked away with? A bitter taste in their mouth about the stock markets. Listen, I'm not right all the time. I'm not going to tell you I'm right 100% of the time because I'm not. Right? There's not one thing that I do that I'm right 100% of the time. And if you want confirmation on that, ask my wife. But we follow something called rules-based trading. And rules-based trading has kept me out of trouble more often than not. You know, when we look at good news, bad news, Eric, though, let's throw some stuff up with bad news. Bad news, hey, AMC, bad news. Bad news for call buyers, bad news for stock buyers. GME,
Tom,
same way.
What? I'm not sure what you're looking for, brother. What are you looking for right now?
But look at, hey, even Biden got some bad news today. Biden's not allowed in Russia anymore.
Oh, here we go.
Russia imposed sanctions on Biden.
Yes,
there
we go.
No more.
Russia
no more
introduces
vodka,
sanctions against U.S. President Joe Biden, Security State Anthony Blinken, and other government officials for tit-for-tat measures of U.S. restrictions, Foreign Ministry says this statement.
Yeah. I mean, you know what? And that's kind of funny to you and I. But you know what? What's not funny? I mean, you look at some of the headlines, financial headlines out there. The death cross occurred yesterday. You know what that is? That's when the 50-day moving average crosses below the 200-day moving average. And that happened yesterday on the S&P. Now, that could be a contrarian indicator where it's time to step in and potentially buy. But I'm kind of a wait-and-see guy when it comes to things like that. We lost $12 trillion this year in the pullback from global stock. Globally, 12 trillion wiped from the ledger. People haven't been this gloomy since 2008. Remember what happened with 2008. And of course, the meme traders out there talked about, well, they're getting choked. We're looking at meme lows that are back to pre-meme lows, especially AMC. Here's the good news. All right, let's talk about good news now. The good news is that we actually do have something to cheer about. If you are a rules-based trader is one who back tests. You can't back test emotion. You can't back test greed, and you cannot back test fear. Right? What we do is we back test real raw numbers. Now, within those raw numbers, when we look at volatility, we can get an idea of greed and fear coming and going from the marketplace. And if we can take those raw numbers, if there's greed in them or there's fear in them, if I've got changes in raw numbers and I see patterns, we can trade those patterns. So I want to talk about the strategy that we use, especially to those of you that are new to me. I want to talk about the strategy we use to isolate and exploit these opportunities. I call them trigger event trades and the trigger event trading strategy. So, Eric, we took profits on Rivian a week ago. You remember that?
Mm-hmm. I do.
We had that celebration. I mean, we talked about it. We gave that trade to everybody. I gave everybody a little slice of what we do in Operation Surge Strike. And you want to take a look at Rivian? Let's revisit Rivian. So let me move over to this chart right here. There's Rivian. Now, this is not a long-term chart of Rivian. This is a Rivian chart that goes back to February because what I wanted to do is I wanted to show you what the stock was doing sideways, and we're talking about in the high 60s, dropped down to the mid 50s. Within 2 days, we were back up to the high 60s again. And then we started the move into earnings. Now, what you're seeing here is you're seeing the price chart coming down. Did you know, Eric, before last week when I told you and what, 1,500 others?
Yep.
Did you know that Rivian and EV stocks in general typically had moves to the downside prior to their earnings?
I did not know that. I don't know most things until I hear it from you, Tom. So no, I didn't.
No, you know what you hear. This is what we hear on TV, and this is the thing where I got something. I'm going to share a little personal story with you guys for a minute. So I've got tinnitus. You know what that is?
I don't.
You know what tinnitus is, or tinnitus, depending on. I bet some of the folks in the chat room know what it is. That's where you have this constant ringing in your ears. I'm hearing it right now. I hear it more when there's silence. I hear it at night, and I would have to say on a scale of 1 to 10, my tinnitus is probably in the middle. It's probably like a 4 or 5. And so I hope it doesn't go any higher because it's already irritating. All right. Now, I talk about that because, again, when you look at something like tinnitus, there's a couple of ways out there to try to solve it. But other than that, it's just not something that you can solve. I bring it up because it's part of the reason why I don't get the normal amount of sleep that I would love to get. I'd love to get a nice, cool 8-10 hours, but I can't. I got to get much less. Anyway, because of that, I spend more time looking at things like this and looking at trades like this. And so you see Rivian and you see the drop there. A lot of people don't know that we had a pattern like this that occurred in EV stocks. You look at TV and you see all we hear when we hear about EV stocks is how great they are, that it's great for the environment. And, there's this big prop up and it's big prop up on mainstream media about EV. Okay. I'm not going to go into benefits and cost analysis of EV, et cetera. But what I will tell you is this: a pattern's a pattern. And the pattern we've seen is EV stocks heading into earnings have typically gone down. We took advantage of that. We took advantage of that move to the downside, but only after we dropped below this low that occurred here. So we were in this trade, and this was the beginning of, at the beginning of the time. Now, there's another thing I want to show you, Eric, that a lot of people don't know. Let me overlay the 7 to 30-day implied volatility chart on this. Now take a look at that. The stock has patterned to go down, but the volatility, the options premium patterns to go up. So what option do we want to buy if we have an idea? If I've got a trade sheet, and this is the trade sheet that we give out, we give these out in alert form to Operation Surge Strike members. What do I want to do if I constantly see a stock going down into earnings and option value going up? Do I want to buy a call or do I want to buy a put? I want to buy a put. And the reason why is because puts go up when the stock goes down. But when you see this red line, you know what that means? That means time value in those puts are going up as well. Let's take a look at a table. So I want to show you an option table. This is the option table last week with Rivian. And we went in and we bought this put option right here. This March 11th, 47 put. I said, buy it for 5 or better. Okay. Now let's take a look at what that would end up costing us. Now I'm going to move this up because we didn't get it at $4.18. It actually ended up going a lot higher. I believe it was around 4.85 was that print that was coming out after the alert got sent. So I'm going to put it in at that. So let's reset the risk graph. All right. So this is what this looks like, Eric, when you buy a put. You're buying, what you're doing is you're buying an option that gives you the right to sell this stock at the strike price. So when Rivian's dropping and continuing to drop, I'm going to show you what this looks like in just a moment. That put option gets more valuable because you get to sell it at yesterday's price, the day before's price, the price that you set the strike price up in. So let's just go forward, and I want to actually move this. I'm going to move this to its latest day. There you go. Look what happened to the stock. This stock this is 45 now, 43, 41, 39, 37, 35. right? That was on March 4th. That's March 14th. So I need to back this up a little bit because I want to show you what happened, not on 315, not on 314, but I mean, look at this trade. We were looking for a 52% return or a 50% return, and we got it. And this is the closing prices. This wasn't even the intradays where we saw this stock drop really hard right there. That's when we got out, right there, folks. 2 days before earnings. I mean, look what happened after earnings. Even the stock dropped even more. But look what happened to the volatility that came out of this. Came out of it the next day when we got a little relief rally, and then boy, did it come out after earnings. And what we're seeing is, you see this 180, and it dropped all the way down to about 110. That is about a 40% reduction in option premium just before and after the earnings. We capitalized on the move up, and we were out before the move down. We capitalized on the price going down, and yeah, you know what? It did go lower, but see that move in volatility? Well, that dropped off quite a bit too. So that's what ended up happening with Rivian, okay? And in a little bit, I'm going to talk about the next Rivian type trade that we're watching, okay? I'm going to give you the stock. I'm not going to give you all the details, but I can tell you this, it's cheaper than Rivian, okay? And I really do love the probability on this stock, and I love the return on investment. So let's first talk about, before we get into that, exactly how we spot these, because, Eric, I've been trading for a while now. How long have you been trading? How long have you been trading in the industry?
The funny thing is, I didn't know anything about trading until I started working here doing broadcasting. I've been learning from a bunch of you guys, and I started getting into it a little bit here and there. I don't do as much trading. I do a lot more investing in the stocks, which I should change up from what I'm learning. And I trade a bit more in the cryptos, which hasn't been going so well lately, I have to say.
Well, yeah. I mean, but you know what? If you're a pattern trader like I am, you take a look at those patterns and you see we do go into some stagnation. And what's going to end up happening in crypto, and we'll save this for another time, is that it's going to move up when everybody forgets about it again, like it did after 2014 or after in 2014, like it did after the 2018 move. Right. And so, you got 14, 15, 16, 17, 18, 19, 20, 21, 22. I mean, if we look at these in longer term patterns, to me, we're setting up. The great thing about crypto is there's no expiration date. Yeah. We're not getting into something that expires. It's a physical asset. It's a digital asset, but it's a physical asset. Again, we'll get into that, and we'll do some more on that next Monday. But in the terms of looking for patterns, when you're a shorter term trader, this becomes, to me, critical, becomes crucial. So what Brutus does is it's designed to spot these type of patterns like the one we saw in Rivian ahead of time. What it does is it goes back in time and it analyzes what happened 1 to 2 weeks prior to an event. Most of the time, that's an earnings event, right? And what we do then is we determine, again, we look at three things. We look at initiation point. When's the best day to get into the trade before the surge, before everybody else starts speculating on it, right? Number two, when we look at all those moves in the past, what's the average magnitude of the trade? What's the average return on investment? And then number three, and this is a critical one, when do you get out? When is termination day? So those three words, initiation, magnitude, termination. And that's what Brutus does. Okay, so it's going to tell me when the move's going to start, how big the move's going to be, and when the move is likely to end. And so that's what we did with Rivian. And so what I want to show you now is I want to show you Brutus, but again, I can't show all of Brutus. I can't show all of Brutus yet with this particular trade, but I want to show you what we're looking at, kind of tease you guys, and also, we're going to be getting into this a little bit more detail at 1 o'clock. But take a look at, there you go. Look at that, Eric. All right, what do you see there? Now, I'm going to tell you what a lot of people see. A lot of people see some dates, some days before earnings, and then we optimize this and we go out past 7, before 7, etc. And then you see this AMC, BMO. I want everybody to pay very careful attention. This is not a stock price, or this is not a stock symbol. AMC, this is not American Movie Corporation. BMO, and I wouldn't even know what BMO would be if it were, as a symbol. This stands for aftermarket close. This stands for before market open. That's why you're seeing that on the screen. When are earnings? After market close, before market open. When is the next earnings dates? And we're looking at those. What's the win percentage on these going back long term? What's the average change in options implied volatility? When I see option changes of 83% of that volatility going up 83%, that gets me excited. 15, not so much. 158 gets me excited. Okay. When I look at negative theta, that's the amount of drop that we see in time value. As long as that number is above this number, that's exciting to me. And I see that in this one here that I've highlighted and this one. And then I look over here, 62% ROI, right? 21% ROI, not as much for that one that had that big 158% change. But you know what? This one looks really good right here. I'm going to share with everybody what that trade is, okay? That's my plan. I'm going to share exactly what that trade is and what we're going to do with it. And I'm going to do that in just a few minutes. Before I do, I want to share with you how we get this information out to our Surge Strike members. So remember Rivian? So on Tuesday, March 8th, we sent out an alert for Rivian, and that was the exit alert. We actually send out the entry alerts as well. Eric, I think you've got that image. You want to throw that up?
I definitely do. Yes, I do. And what it reads here is, you want me to read through what it has here? Give you a little rest. Here we go. So action to take, March 8th, 2022. Sell to the close, the Rivian March 11th, 2022, $47 put for a limit price of $7.50. We just scored a profit on Rivian in 1 day. Congrats on your 1 day profit in Rivian. In less than 24 hours, we've already hit our 50% profit target. If you already had your exit order in, then there's nothing else to do. I like how it takes you through step by step and then lets you know when to stop, when you're done, so you don't kind of get stuck and figure out what's next.
Yeah, well, we do something called checkmating the markets, and I try to do this as much as I possibly can, because if I'm taking a trade, I want to know what my worst case loss is, what my target profit is, and if neither of those happen, when is the actual exit day? And so when we put out something, let me just show you the next one that we did. So, because this is all about, well, what have you done for me lately, Brutus? That was last week. What have you done for me this week? How about a 40% profit on Coop, C-O-U-P? We talked about Coop in here. So let's take a look at that Coop straddle. So a Coop straddle, what we did here was we actually put a call and a put on at the same time. That's what you do when you buy a straddle. You're buying the at-the-money call and at-the-money put. And what we're looking for is we're not looking for so much price direction. We're looking for an increase in volatility, all right? And so what ended up happening with this straddle, well, Eric, you've got that image, right?
Yeah, we have it up right now, and I'll take them through this one as well. So the action to take is sell to close, the Coop March 18th, 2022, $123 call, and sell to close the Coop March 18th, 2022, $123 put at a limit price of $24.75. If you're not filled by 3 p.m. Eastern time, cancel the order and place the following. So this one's a little bit more complex than the last one, but still, you're being guided nicely. And to finish off, we would sell to the close the Coop March 18th, 2022, $123 call, and sell to close the Coop March 18th, 2022, $123 put at market price.
Awesome.
Yes.
And let me just show everybody what a straddle actually looks like.
All right.
As I set one up. So this is not a recommendation. I'm just going to take Coop and we're going to see how much a 1 week straddle would cost on Coop today. And so if I were to go in and type in COUP, and let me go ahead and update that. And a 1 week straddle would be, well, let's just take a look at the one that's 10 days to expiration. So going out to the March 25th, right? March 25th straddle. And what I'm looking at here is what the stock priced right now at $73.10. The at-the-money options are the 73 calls and 73 puts. So if I bought a 73 call, going to cost me about 440, and I buy a 73 put, going to cost me about 405, put that together, and let's take a look at what that's going to look like. So that's going to look something like this. So I am buying, and I'm going to move around the screen a little bit, but I want to zoom in so you can see what it is that we're doing. This example shows buying the March 25th, 2022 73 call and buying the March 25 73 put. Now, look at what we're doing that for, all right? You see a price for the call. You also see a price for the put. And when you add those two together, that's the actual price of the straddle, okay? Take the call price, take the put price, you put those together, and you get the price of the straddle. Now, you know what? It actually gets, this is analytical software. This is my own analytical software that I use. But when I go to put this into something like my broker account, it actually is quite simple. It's quite easy. And I'm going to slide over here a screen for everybody. And let's take a look at this real quick. So this is my all-in-one trade ticket. This is Street Smart Central. This is what it's going to look like. But this will look very similar in literally any brokerage account that offers you the ability to trade straddles. So to do this, we're going to type in COUP. And then there's Coop software. And then I have all these things I can do. And I'm looking for straddle. And there it is. Now, depending on what software you use or what platform you use, it might fill in a lot of things. This is, again, Street Smart Central fills in a lot of the information for you when I put in straddle. But what it's already filled in for me is the wrong date. So if I really wanted the 25th, again, not a recommendation, and I'm not doing this. I'm just showing you this as an example. Now, what's interesting is that Coupa is trading a little bit below 70. Let's go ahead and look at the 72s. All right, 72 call, 72 put. That's pretty close to where the straddle is right now. So the straddle's trading around 835. So it's 780 by 890. That's pretty wide. But if I wanted to buy this as a limit order, I wouldn't be doing it at the ask. I'd be doing it somewhere near the middle. Maybe I want to do it at $8 and let's call it 50 cents. That's a little bit above the middle. That makes sense. And that might be something people ask me, hey, do you split the difference? I split the difference a lot of times, and sometimes I'll give them a little bit. And I might not get filled on it. But if I get filled, I'm getting filled at my price. Buying one. This is a one-ticket trade for a debit of $8.50. And this is not a trade that has margin. This is a debit trade. The most you stand to lose on this trade is what you put into the trade. Now, if you want to lose $850, because that's what the straddle is going to cost you. If you really want to lose $850, Eric, here's the recipe for losing everything.
Oh, boy.
You put this on, and you forget about it until expiration. And then if Coupa closes at $72 on the dot, both of these options expire worthless. That's how you lose everything. Now, I'm sure everybody here and the folks on YouTube that are watching me, you don't want to lose everything. So we follow a set of rules-based strategy. We take follow a set of rules. And the rules we use on this is that we only trade it in times where we see an event, a Super Bowl event that's going on, that everybody wants tickets to the show. And what we do is we buy back before the event gets advertised. And as the event gets advertised on financial news and everywhere else, then those options, those calls and puts start going up in value. And as they go up in value, they become more expensive. And then we're happy to turn around and sell like we did with Coop. That was a 40% profit. Okay. That was a 40% profit on a high dollar straddle. So it brought in a high dollar amount. Okay. So I wanted to share with you exactly how the Coop trade went in and how it differed from Rivian. So thank you, Brutus. What have you shown and what have you done for us lately? And that is Coop, and that's how you put that in. Oh, by the way, how do you put the exit and how do you checkmate the market? Well, if I put this order in and I wanted to get it out at 12, once this order's in and if it's filled, and only if it's filled, then what I'm going to do is I'm going to go in and I'm going to create the exact opposite order. I'm going to sell to close that Coop trade for a credit. And I put in the price that I want as my credit. So you buy something for $8.50 and you get it, you sell it for $12, you made a profit. Okay. And a lot of times, many times, we look for doubles. We look for doubles on trades with Operation Surge Strike. But there are times when we go for 50 percenters. That was kind of the case for both Coop and Coop was a trade where the clock ran out. We had to take our 40% instead of 50. But with Rivian, we hit the 50% in 24 hours. And the reason why we're looking for 50 and no more is because the options were they were on the run and they were already expensive. So we weren't looking for a double. In fact, we were looking for something in the high 50s for Coop and something close to that for Rivian. And that's going to bring me to, and I'm going to hold on that trade. I want to share it with everybody, the trade that we're looking at here a little bit before we get to the end of the show. So for those of you that want to get access to all of our trigger events and our team's best research and also how to trade them, just like I showed you how we set up the Coop trade, then join me in Operation Surge Strike. And we got that order form for you. It's down there in the also a phone number for you if you want to call if you have any questions. We're doing our weekly members only live session at 1 o'clock today. And for those of you that are part of Operation Surge Strike. And so we're definitely going to get into that with everyone. Before I jump into the top pick that's coming out later this month, that's on Brutus's top pick. How about we go in and look at some charts and do give us your favorite optionable stock. Give me your favorite optionable, and we'll look at it, and we'll see if Brutus has anything to say about it. All right? Let's do that for a few minutes there, Eric. Do you see anything that anyone wants to look at in the area of charts?
Of course I do, Tom. We have, how about the QQQ?
Okay, well, the QQQ will not turn up on Brutus because it is an ETF, and it's not, what we find with the Qs, every once in a while, it shows up on one of our morning reports as an expensive or a cheap optionable. And you know what? In fact, I can actually go and look at that because I'm curious. A lot of the stuff we do, guys, is live. So I'll jump out live and I'll look at some things. I don't have a whole lot of, we have an idea of what we want to talk about in the morning, but I like to go sideways. Let's look at that morning report. See that morning report? Here's what's expensive right now. NEO, Alibaba, HYG, KWeb, JD. I mean, guess what's not on here? Well, there's ARK. That's a fund that's optionable. But when I look at those top 10, you know what disappeared? What disappeared was SPY, QQQ, the ETFs we saw last week. They're gone. They're nowhere near as expensive in volatility as they were just a week ago. And then on the cheap side, look at this AMC down here. Yeah, it's cheap, all right. So is the price of AMC. But you see a lot of the stuff on here, these are cheap. Heinz ketchup, cheap right now. But cheap because a lot of the reason these are cheap is because they just came out of earnings. And what was expensive just got a whole lot cheaper. So when it comes back to QQQ, we'll take a look at the Qs. Let me run the 100-day chart on the Qs. And let's also take a look at it and see what it looks like. So Qs actually still have that trend up and implied volatility. Yeah, they're having a good day today. NASDAQ's having a good day today. It's up. It's up to close to the highs of yesterday. But when I put the channel test on this thing, it tells a different tale. It says that, we could get a bounce up to 330 before we run into any resistance. We're at 326. So we could see more of a move up. Maybe it's a sucker play. Maybe it is the turn and that we get that rally we're looking for. Just saw some news that came out that said Putin said Ukraine isn't serious about finding an acceptable solution in the talks to end the fighting. Okay. Well, that doesn't sound like a news story I'm looking for to turn around and buy the markets. But again, the markets are not about logic. We know that. What else do you have, Eric?
I got PLTR, Tom.
PLTR. Let's take a look at it. PLTR. Planeteer. Planeteer is I mean, you can see kind of now this is a broken channel pattern where we're seeing downtrend after downtrend after downtrend. When I slice all this together, and let's do that on the channel test, we've not yet hit an area that I call a critical area to be a bottom. You see these two? See this long-term trend, Eric, and the short-term trend? These two lines, this bottom and short, and this middle of the road longer-term trend are coming together, and they're going to form a really nice area of support for Planeteer. So if Planeteer comes back down, it might have to come back down to the Feb 24 lows. It might have to go a little bit lower depending on how long it takes, but that's going to form a really nice area of double line support for Planeteer. Let's move over to YouTube, and I see one my wife loves, and she's not the one asking about it, but I'm going to put it on there anyway. CHWY, and that is Chewy. Man, I mean, this stock was all the rage a couple of years ago, right after the pandemic, ran up. What happened to Chewy? Chewy got bought by, was it Petco? One of the pet companies bought it. And I don't know if that was near when it was hit its high. I think it was much higher than what we see here. In fact, if I go out and look at this, I'm going to go out long term on Chewy because I haven't looked at it in quite a while. Oh, yeah. Yeah. Chewy was out there. I mean, this is 2021 highs. Not even a year ago, $95. Where are we at today? 36. Woof. Woof, as they like to say. Lower highs and lower lows. All right, now let's see what the channel test has to say about this and see if we're coming into an area. And not yet. Not yet, but you see this long-term. So you got the short-term support, and you got the long-term, that long-term channel is just coming down. It's hitting it right now. But I really think we might have to make new lows before we run into an area where Chewy might become a longer-term buy. Where's that long-term low going to be? Low 30s. So we still might have another 10% lower on Chewy's before we get that double line support that we're seeing happening out there. All right. So that being said, let's talk about some earnings that are coming up in the days ahead and my top trigger stock that I want you all to start to follow. So in the days ahead, here's what we're looking at, right? I'm going to put them up on the screen. Let's start with, and what I also need to do is I need to make sure we're in a chart type where we can see not only the stock itself, but I also want to see that implied volatility level. And I'm only going to go back about, let's go back about 90 days on these so we can see a little bit bigger chart. So the chart's going to look like this going forward, all right? With Chewy's, we got earnings in 14 days. Maybe that's going to be the catalyst to hit that low that we might be looking for before we get a bounce. But let's start with Micron Technology, MU. MU, as you can see, Micron has definitely not been immune to the drops that have occurred in the market. Micron was as high as $98 at the beginning of the year, has dropped down below 70, hit new lows today before bouncing. Now we're seeing it on the bounce and moving a little bit higher. What has been happening? Well, we're starting to get an uptick in volatility. Here's the last time we hit this thing. This is what we want. We want the rocket ship to occur. And the rocket ship occurred 5 to 6 days before earnings. Now, next earnings are not in 14 days. That's Micron. We might get the rocket ship start to take off there. The question is, where is the pattern on the stock? Is it up? Is it down? Is it sideways? Okay. I'll tell you this. It has a 75% win rate, whatever pattern that might be. It also has 62% average ROI. Might be a good one. Let's look at our next one that I want to focus on. That is DRI. All right, DRI. DRI, not really good ROI. And the reason I say that is that, yeah, it had a nice rise, but look what happened. This does not have a price pattern. It does not have an up, down, sideways price pattern for Darden restaurants. And boy, look what happens after the earnings come out. That implied volatility, which goes from 75, dropped to below 30. That was a better than 50% off event that occurred right after earnings. Starting to rise again, but we're not seeing that big lift off. Earnings occur in 9 days, so that might change. But I don't like the average return on investment, and Brutus doesn't like it either. Okay. Another one we could look at is ADBE, and that's Adobe. So you look at Adobe, and Adobe has, again, here's a stock that $700 a share, Eric, back before Thanksgiving. Nobody's giving thanks now to the stock as it's gone from $700 a share down to, wow, below 420. I mean, we're getting into that 40% off on the stock price, right? But does Adobe have a pattern? It does, but I got to tell you, the ROI on Adobe is even worse than the ROI on Darden Restaurants. So even Adobe, as good as it looks as a pattern, it's a 75% pattern too. It just, if I'm vetting it and I'm looking at it, it's just not the best one. Okay. Now, I could give you all of this stuff right now, guys, and we could talk about, these things. And I'm going to share with you. Let's look at optimal call put. Let's look at Brutus. You know what's on here? What's on here is Darden Restaurants. What's on here is Adobe. What's on here is Micron. My top trigger event play that I'm looking at going forward, Micron Technologies, MU, because it has a 75% pattern, right? Has a 75% pattern to the downside. So when you're looking at Micron, we're going to be looking at trading Micron. If you take a look at what Micron's done in the past, that pattern's not to the downside, pattern to the upside. My bad, I'm thinking about Rivian. So the pattern on Micron is to the upside. And of course, we've got that exact day we're going to be looking at going in and buying that. And that exact day we're looking at selling it. But look what's happened in the past. When we bought the calls the week prior to earnings and we sold it right before the event. This is what happened in December. That was an at-the-money event. It did have a loss, 22% loss. But look what happened the quarter before, 11% gain. Look what happened the quarter before that, 183% gain. Look what happened the quarter before that, 76% gain. All right, these were all based on trigger events for Micron Technology. So when I look at Micron Tech, we're going to be looking at that trigger event. And, I'm going to give you the average days on this. So the average day on this trigger event, what I see with Micron, if I go back to the stock chart, let's bring up Micron one more time. And where's my stock chart that I want? That's it. MU. Okay, so MU has consistently gone up that week prior to earnings. Our next earnings are in 14 days. The trigger event that we're eyeballing on this one right now, based on that earnings event starting on the 29th, we're looking at the trigger event starting around the 22nd of March. Now, I won't know the exact day because Brutus is going to go in there and optimize and give us our exact day. But for those of you watching me here, our time is around March 22nd. It's giving us a 75% win rate that if we buy call options in or around that day and we sell them before that trigger event, we're looking at a 62% average return on investment. Now, my Operation Surge Strike members, we're going to give you the exact details when they happen. We'll tell you exactly when Brutus says go and when Brutus says stop, okay? And so you'll get the entry, you'll get the magnitude, right? You'll get our target, you'll get our absolute get out before the event happens. You'll get all of that on the alert when we put the alert out for Micron Technology. So once again, we're almost out of time. If you want to get access to all my trigger events and our team's best research, then join me in Operation Surge Strike. I got an order form for you. It's right there in the announcements. Also, there's a phone number there if you have any questions. For those of you who are Operation Surge Strike members, I'm going to take a quick break. I'm going to be back in a half hour. Eric, myself, Mike Wade's going to be joining us in the members-only room, 1 o'clock. Otherwise, everybody else, I'll see you back here again, same time, same channel, and we'll talk about Wednesday then. Bye now.